Okay, welcome to the Chapter 13 Payroll Liabilities and Tax Records presentation lecture. If there were notes that were attached to Google Classroom with the presentation lecture, please make sure that you have that handy and you're filling in the notes as you go through and watch the presentation. Let's take a look at journalizing and posting the payroll, which is Section 1. After we have completed the payroll records like we had in Chapter 12, now it's time to journalize and post them to update our accounting records. Analyzing the payroll transaction, let's take a look at that first. After all payroll checks have been written, the next step then is to record the payroll in the accounting records. We do this by debiting an account called salaries expense. The salaries expense is going to be an account that is used is debited for the gross earnings for that particular pay period. Now, if we analyze the payroll transaction and get ready to journalize it, here are the things that we're taking into account. Amounts taken out but yet not paid are known as liabilities. So what liabilities are going to be taken out but yet not yet paid? There's different deductions. So we've got federal income tax, Medicare tax, hospital insurance premiums. Then there's also employees' federal income tax, Medicare tax, hospital insurance premiums payable. All of these different deductions are going to come out of the employee's paycheck and then recorded as liabilities to be paid later. Other possible liability accounts, depending upon your employer, could be U.S. savings bonds payable, credit union payable, union dues if you work for a union or work within a union, and then United Way payable as a charity donation. Now, when the transaction is journalized, let's take a look at the payroll register on page 299 in your textbook. You can reference that back to this illustration. And for this one, on June 30th, we are paying the salary for this particular pay period. So on June 30th, we are going to pay a total of $1,350.25 in salaries. And then we are also going to deduct all of the deductions. Deductions are right here. So salary minus these deductions is going to equal the cash in bank, which is going to be the actual cash paid to the employees for their work during this pay period. These liabilities here will get paid later. Demonstration problem 13.1 walks you through the process. Take a second and practice for yourself if you have the demonstration problems handy. Give it a try. Label the journal page here. Label the transaction date here. And then journalize the transaction with the description and the proper debit and credit amounts. All right, let's take a look at Section 2, which is employers' payroll taxes. This is another transaction slightly different from the previous transaction. When it comes to computing payroll tax expense, this is going to be the employee taxes, which are the FICA taxes, federal unemployment tax, state unemployment tax. FICA taxes could be slightly different in percentages, but this is going to pay the same percentage that the employee does, which is going to equal 6.2% for Social Security tax, or a maximum ceiling of $84,900 in taxes, and 1.45% for Medicare tax. Everybody has to pay these taxes. Unemployment taxes, Federal Unemployment Tax Act, also known as the FUTA, and the State Unemployment Tax Act, which is the SUTA, require employers to pay unemployment taxes. This allows employees who are laid off for reasons of not having work or other reasons to be able to at least have some type of an income while they look for new work. Taxes provide funds for workers who are temporarily unemployed. The federal tax rate is 6.2% and 3.6% in the state of Wisconsin. Now you can subtract the state rate from the federal rate, and in this case, federal unemployment tax would be 2.6%. So if you wanted to just calculate out the total amount of taxes, you could do the math calculation if you're doing both of them or if you're going to subtract one from the other. So these are unemployment taxes and tax rates for the state and for the federal. Now let's take a look at problem 13.2, computing employer payroll taxes. If we take a look at this in terms of T accounts, we have our scenario given to us in the problem's description. The Tai Ling gift shop employees had total weekly gross earnings of $3,946.45. Social Security tax rate is 6.2%, Medicare tax rate 1.45%, the state unemployment tax rate is 5.4%, and the federal unemployment rate is 0.8%. In the T accounts, enter the payroll taxes for the week ending June 23. So take the calculate out based off of gross earnings, the percentage of the deductions, and then put them in the proper accounts. This number right here, this is the total salary, this is the payroll tax expense, this is the amount of money that is going to be taxed. How much of it is going to be Social Security tax payable, liability credit, Medicare tax payable, liability credit, federal unemployment tax payable, liability credit, state unemployment tax payable, liability credit. So give this one a try on your own. We will go over the solution as well as finish this problem in class next time we meet. Journalizing the employer payroll taxes. Now that we have it in T account format, now we can go ahead and plug it into our journal and journalize it. We are going to use an account called payroll tax expense. This is the account that's used to record employers' payroll taxes. The liability accounts that are also going to be affected by this transaction are, as indicated in the T accounts in the previous slide, Social Security tax payable, Medicare tax payable, federal and state unemployment tax payable. Here's an example of the employer payroll tax transaction. In this case, we have on June 30th, we have a payroll tax expense of $187.01. And actually, I need to back up here because I did make a mistake. This is the amount of the salaries expense that was paid for problem 13.2. So we need to take the calculation of the percentages of all of these different deductions and liabilities. Then the sum of all four of these deductions is going to be the payroll tax expense. This is the salary expense number from the previous payroll transaction. The sum of these four deductions is going to be the payroll tax expense debit. Okay, so that would be calculated here. Here are the liabilities that are deductions. The sum of these deductions equals the payroll tax expense for that pay period. We will go over all of this in some of the demonstration problems that we do in class. All right, so problem 13.3, using the payroll taxes calculated in problem 13.2, record the employer's payroll taxes on page 26 of the General Journal. So taking the information from the T accounts and plugging it into a journal transaction. Put the proper General Journal page here, the date, the description of the accounts, and the proper debit and credit amounts. Tax liability payments and tax reports. Final section. Paying the payroll tax liabilities. All right, so remember when we recorded them, but we haven't paid them yet? That's what we're doing here. So FICA and federal income taxes. Employers are going to make two payments. They will make one payment to the Social Security and Medicare taxes, and then also another payment to employee federal income taxes that have been withheld. Usually paid on a monthly basis using the federal tax deposit coupon, which here's an illustration right here. So in this indication, we have the tax year month. In this case, it's June. The amount, the employer identification number, the type of tax, and the quarter of the period in which the tax is going to be paid. And then here is the name of our business. We are the Roadrunner Delivery Service with our address. So this is a coupon that is used to determine how much of our liability has to be paid based off of that quarter, that month, that pay period's payroll taxes. So when we pay back the liabilities, we simply are going to debit each liability for the amount that is owed. In this case, July 15th, we are recording payment of tax liabilities to employee federal income tax, Social Security tax, Medicare tax, and that is being paid by check out of our cash account, check 208 for $908.76. So a basic cash transaction, compound transaction, paying off liabilities. Then the state income taxes, each state's going to determine when payments are made. So when we are notified from the state that these need to be paid, or if we have them in our memorandum, in this case it's a check for our source document, we then make the payment. So employee state income tax withheld for that amount, cash in bank, $348.13 is how much that is paid back to the state for state income tax. This is just like paying off any other liability. Same thing for federal unemployment. Tax number is 940. This goes back to the form that we were looking at before. Most pay it quarterly, which is every 3 months. And then here's the journal entry. So on July 15th, a debit to federal unemployment tax payable for $129.60, credit cash and bank $129.60, source document check $210. Again, recorded just like any other payment to a liability. State unemployment tax paid quarterly. Again, same thing, July 15th. Debit to the unemployment tax payable, credit to cash and bank, check 211. Other payroll liabilities that may need to be paid, hospital insurance premiums, whatever that might be. If we have some type of policy as an employer that we offer our employees, we have to pay those premiums. So on July 15th, we're paying hospital insurance premiums, $28.38, crediting cash and bank. Again, just like paying any other liability. All right, problem 13.4 is journalizing these transactions for paying off these liabilities. So please go ahead and give those a try if you have the demo problems available. Otherwise, we will be going over the solutions and doing these in class so everybody is clear on how to pay off these deduction liabilities. Make sure you put the proper general journal page here, date, description, account amounts that are going to be debited and credited. And demo problem, this is going back to demo problem 12.5. We will be addressing this in class also. Feel free to work through demo problem 12.5 or revert back to it, which is a demo problem that we did in chapter 12. So if you still have that packet, you can take a look back at that. We will be revisiting that and applying it to our chapter 13 demo problems. Preparing payroll tax reports. Now, when it comes to this, we have different forms that we use. We have wage and tax statement, which is a W-2, a W-3, which is a transmittal and wage tax statements. Those are both submitted annually, as well as a 940 form, which is employer's annual federal unemployment. That's the FUTA tax return. Then the 941 is the employer's quarterly federal tax return. So these are different tax forms that are used when computing and recording these taxes. Wage and tax statement W-2, this is the one that we get at the end of the year. Each employee will receive theirs by January 31. These are what are submitted to our accountant for tax return purposes. It's going to state gross earnings, federal income tax withheld, FICA tax, state and local income taxes that have been withheld. Here's an example of a W-2. You might, if you work right now and you have a job, you're receiving these, and you probably see these on an annual basis. This is just another example. Most of them are quite common and quite the same, but some of them might be a little bit different. The 940 form. This is going to report employees' unemployment taxes for both the federal and the state. Form 941 is a quarterly federal tax return. This accumulated amounts of FICA and federal income tax withheld. It shows FICA tax owed by the employer. Again, just examples of different tax forms. Here's an example of a 941. For Roadrunner Delivery Service, this one is filled out and then filed with the federal government, for the IRS. You notice here we will be going through examples of these in class, but you can take a look at this. Here's total wages and tips, income tax withheld, going all the way through. You can see the calculations as it calculates out to determine what the total taxes were paid for this period, $2163.34. The W-3. The transmittal and wage of tax statements. This is going to summarize information contained on employees' forms W-2. It's submitted with a copy of the W-2 to each employee. So this form is going to look like this. Signed by the owner, indicating wages and tips, taxes that were withheld, the business of the organization, what type of form it is. We will be going over examples of this in class also. And that concludes the presentation lecture for Chapter 13. Please make sure that you review the slides if needed. We'll be going over the demo problems in class next time we meet.